Going back to the companies here, what one are we doing here? Zoetis? Is that the way you say it? Am I saying that right? Zoetis?
I'm going to go with that. Yeah, that sounds good.
Okay, that was, we believe, a spinoff from Pfizer years ago.
I just confirmed 2013 is when Pfizer spun it off.
Okay, all right. And that was, I remember when it came out, like, wow. And they're it shows here a drug manufacturer, especially in generic, but it's basically a pet drug, right?
Yeah, they focus on animal health.
Okay. All right. Well, let's see. 2% short on it. 99% institutional owned. That means a lot of people do not own this individually. Not a bad start. The PE ratio is 20.4. Oh, the symbol is ZTS. I think I forgot the symbol. ZTS or Zoetis is the symbol. 20.4 versus 52.8 for the industry. Price of sales are high, though, 5.8 versus 2.1. Price of book value also high, 33.4. That's price of tangible book value versus 25.2. And price of cash flow high as well, 18.5 versus 13.3. They do have a PEG ratio of 1.9, which is positive, with nothing compared to the industry. So hopefully when we get to the earnings and the sales, we see some high numbers because you are paying a lot for the earnings, sales, book value, and cash flow of this company. That's what we get. Earnings per share of last year are up 11.7% when the industry was down 7.9. Sales not too exciting. They were up 2.7, but compared to the industry, that was down 9.1%. And the 5-year EPS growth estimate from the analysts is very nice at 10.5 because the industry, they're expecting a decline of 5.4. Now, they do pay a dividend, not a bad dividend, 1.7% using 33% of their earnings to pay that out. We do see on the balance sheet, they got a current ratio of 3.6. That compares to the industry at 2.7, but a lot of liquidity there appears to be happening. Debt equity, not great. It's 1.4, and that's where we start getting worried. We don't want it much higher than 1.4. That's double the industry at 0.7. Surprised on the intangible assets, only 25% versus 35%, so not a lot of intangible assets there. Their net profit margin is very good. And I would double check this looking at the income statement to make sure it says high, but it shows 28.2 versus 4.1. I'm just wondering if the profit margin on animal drugs, I'll call it, is so much higher than it is individuals or
sure
people.
It is.
Yeah, I guess so. Yeah, people pay anything for their pets. Return on equity is very good, 49.1 versus 7.3. Free cash flow is very good, 2.2 billion, about double the industry at 1.1 billion. Chase, what do you got going forward?
Yeah, so current price here for, again, Zoetis, ticker symbol ZTS. It's $120.82. 52-week range. The low here, $117.26, and the high, $181.85. I mean, the stock's been under pressure this year, down about, I'd say about 26% over the last 1 year. It's now down about 30%. 5-year return, not good either, down 26%. 10-year return, though, you bought it 10 years ago, you're up 156%. So, a great first 5 years and then a lackluster after 5 years.
And with that dividend, it's 193% with a dividend. So...
But one thing that is actually weighing on them is stock fell about 12% last week, hit a 52-week low at that point. They lowered their full-year revenue guidance, which is something you don't want to see in a growth stock. Revenue is now anticipated in the range of $9.4 billion to $9.475 billion. The prior guidance was $9.45 billion to $9.6 billion, so they went well below that initial low end of the sales range. And, even with the pullback, I mean, the stock's still expensive. You go out to December 2026, estimated earnings per share here, $6.81, gives you a target sell price of $113.05, still trading at nearly 18 times those future earnings. So you're getting now less growth at a high valuation. I mean, this could be problematic where it could be in limbo land in between a growth stock and a value stock. And if that occurs, that fall could be much worse because value investors aren't ready to buy it yet, and growth investors, you're not getting that growth anymore.
And as I said, only 1% is individuals, the rest is institutions. So institutions seem to like this, which is surprising to me because it's just, I thought it'd be the other way around because people love their pets. Like, oh yeah, this would be a great investment. But the individual investors not really participating here. And we held, well, actually, I think you were probably in high school back then, but we did held Pfizer back many years ago.
I was college. Graduated 2011.
Oh, okay. Well, I think it was before that. Yeah. We bought Pfizer. Did very well on it. Oh, okay. I remember the spinoff, and we sold it because it just didn't look very good. So, I mean, I do remember this and think, oh, would this be a good thing because of the fact with the drugs for the animals and so forth? But I guess over 10 years I did good, but not a buy now.
Yeah.
Yeah.